Okay, so we get this question all the time, Chris. You've been investing for 20 years now, holy cow, or just about 20 years. I'm at about 25 years. And this question comes up every day when we're talking to different clients and investors, and that's, is cash flow the most important thing to you and to I in a real estate investment?
Man, well, I think it really just depends on who you are. I look at the holistic deal individually.
Yeah.
There's a lot of things that I may look for that somebody else might not, and vice versa. I think cash flow is one component, but overall, I'm looking at appreciation. I'm looking at tax benefits. I mean, that's one that people often miss. That is really kind of like the hidden gem of all of this.
Yep.
Particularly if these tax cuts come back into full effect that allow for the accelerated depreciation on these assets. But to me, I think it starts with, forget the financial side of it. It starts with just finding a quality property, as you did as well.
I know what you're about to say.
We both started in the wrong areas.
Tough areas.
Yeah.
Well, why did we do that?
It was cheap.
Well, I think we were most concerned with cash flow, right? It was cheap and the projected cash flow.
Well, I think projected is the key word there.
There it is,
Yeah. So, I mean, our first foray, at least mine, and I think yours was the same, was into some very cheap properties because that's what we thought all we could afford at the time. And, and ultimately, what showed up on the pro forma was not actually what you got at the end of the day. Bad tenants and, people destroying houses and all the things that come with investing in bad areas.
And cheap houses, there was deferred maintenance that you and I could not see.
Yeah.
Sewer mains and different things that came about
Exactly.
that weren't on the pro forma.
So, I'd say, that's where today, that's where I start, is find the right asset and in the right location where you think that there's going to be growth. The most money that I've made in real estate has ultimately been in long-term hold.
Yeah.
I make money on cash flow, and that's nice, but really that's just paying the bills, and maybe you kick off a little bit of cash flow to put in your pocket. But that's nothing to write home about. What happens is over 5, 10, 15 years, and then you start realizing the appreciation on those, and that's really where I've made the most of my money. But cash flow is nice to have a little bit of that up front, and to have the depreciation. I mean, the depreciation is really huge because when you tax adjust the the return, it's kind of like look, you buy a muni bond, and a muni bond is tax free, right? So they may only be 3% muni bonds. But when you tax adjust for it, okay, well now all of a sudden, it looks a lot better because you're not paying taxes on it. Well, real estate's very similar. You're not paying that tax bill because you're depreciating the asset as you go along. Again, and this is where you got to look at risk reward, right? You could go out and buy a treasury bill and make about the same, maybe a little bit less of a cash flow as you would buying a home, except the treasury is quote unquote risk free. Which I think that is debatable. considering we're, we've just been downgraded from a credit standpoint again.
I saw that.
But you don't have any upside. It is what it is. Whereas the real estate is just, going to keep going up in value for all the reasons that the United States dollar is potentially, is eroding and weakening over time. I mean, gasoline used to be a nickel, so I hear. And my dad likes to tell me that.
Oh, I'm sure.
But it's not a nickel anymore, and same happens with real estate. So that's where I look to is buying in areas that the long term potential is there. If you buy in a bad area, chances are in 20 years it's still going to be a bad area. They don't often go the other direction.
Yeah, and those areas you will see a pull up, and we saw this of equity growth and appreciation. The problem is, it will pull up the cash flow with it, but again, the maintenance, the repairs, the turnovers don't stop. So what we saw, even when you and I were sitting on properties and going, wow, these are really appreciated, and even if the rents went up, that original pro forma that we did just wasn't playing out.
Yeah.
And we had to move the money forward. So I think at first my most treasured thing was cash flow. That's what I was taught by the real estate educators I went to. You're going to be able to cash flow it. And what I've learned is, yeah, cash flow does come along, but cash flow has come along to me the longer I've been in the market. And so the appreciation has really pulled up my net worth the most, by far, not the cash flow it brings in, but the cash flow does go up with it. But again, I think for me now, and you've seen it, I'm looking at properties long-term, hopefully generational, and I'm going to say, okay, well, I will sacrifice cash flow for the quality of the property. Because if I'm looking out 5, 10, 15 more years or longer, then I know that for the best results, the least amount of headaches, it is going to a little higher quality and sacrificing some cash flow in the initial, because 3, 4 years comes quickly. And we did that whole test with, you know, a few thousand of the old fixer-uppers we did, and then the first batch of, 4,000 units we did with the new construction. And it just pulled way better for that. So anyway, I guess overall, you guys have been asking the question. They're both important. They're both great. You know, properties you've owned for 20 years and they're basically paid down or paid off and they're kicking off cash flow, that's great. But when you're first building a portfolio, I do think that you have to prioritize. And what we've learned from our own experience and some of our bigger clients is, you know, what is the tax benefits? Because some of you are trying to shield it. You know, what is the long-term growth? Because I don't need to live off cash flow today. And then where will cash flow be? You know, but again, knowing that priority order is important.
Well, and I'll tell you, I mean, you touched on that, you know, the increase in cash flow over time as well. Like I remember those, you know, those duplexes that we were selling in Ocala years ago. When we started, those were renting for $750, $800 max a month. They're now renting for $1,250 a month.
$1,250, yeah.
So, you know, that's when it gets really fun to me, is when I'm looking at a property and going, wow, I'm making, now all of a sudden I went from, you know, making some cash flow to a lot of cash flow.
Yep.
Because appreciation happened over time, and rental appreciation happened over time. And so then that's really, to me, the most fun part of the deal is you're like, well, man, I'm making all this cash flow, but the value's also gone up this much. Do I want to sell it or do I want to keep it? You know, so there's it's a good problem to have. But again, all the way along, you've gotten your depreciation, which sometimes does sway the decision in my book, because when you sell the property,
Recapture.
you got to recapture the depreciation. So now you're recapturing it at the time of sale. So you're still realizing a big gain at the time, but that is definitely something to weigh in there when you see that cash flow number, and then you see the profit number. You know, the profit number after you recapture the depreciation is sometimes taxed at a higher rate than what you.
It can be.
Yeah.
Which is why we encourage 1031 exchanges, which we won't get into on this one. We've talked about before, but that can be a great way to move from one property to the next as well, which we've both used. So anyway, guys, just wanted to update you on that. Cash flow is important for us. It's been planting the right seeds in equity growth, looking long term. That's what's made us the most amount of money. They work great together, but definitely prioritize your investment, whether it's with us or someone else, of what's actually going to make you the most amount of money. And I would make those your first markers of making a decision. All right, talk to you soon.
Bye, everybody.